Good morning, everyone. It's very exciting for me to be here. Thank you very much for allowing me to be here. I am honored. I'm excited to see so many employers and other stakeholders in the room, but especially from the employer's perspective, because as my first slide says, we are standing on the brink of change. That is really what the two-pot is about. We are moving into a new phase as far as the retirement sector is concerned in South Africa. And for that reason, it is very exciting to see the level of interest that employers show in this particular topic. So let's just, before we start delving into the two-pot, let's just look at really where it comes from. Lickley commented earlier on about our participation in other African countries. Retirement, less than 10% of members worldwide, not just South Africa, worldwide, are able to retire with income at levels sufficient to sustain themselves. So it's not a problem to South Africa or Africa on its own, it's a global problem. One of the biggest problems that is escalating that is our ever-increasing population and declining fertility. People are living longer. Many child that will live to age 150 has already been born. And that is part of our problem. That by year 2030, there will be 8.5 billion people on this planet, all living longer. So unless a problem is found and resolved with regard to retiring with insufficient income, the burden is going to continue growing on the state and on the taxpayers of a country. The burden on the state is important because the more money a government has to spend on looking after its elderly, the less money there is to spend on economic development, infrastructure development, and so forth. And that, in again, leads to reduction in job creation and uplifting the people of a country. Greater coverage of members on pension funds. We have to get to a point where we have more persons contributing to a fund. In South Africa, I think we are just under 60%, just over 50% of employed people are contributing to retirement funds. That is way too low. So when we look at needs for retirement reform, that is something that we have to take into account. And then, of course, Lickley mentioned that earlier on also, good value for money for retirement savings. It's no use we create products for members, good, valuable outcomes for those members. And then, again, there are greater risks in life and in the world. Investment returns. There's the risk of ESG, environmental, social, and so South Africa started on its road to reform in about 2012, and since then we have really made great inroads. We have encouraged preservation, enhanced governance of funds. We introduced the annuitization of retirement benefits in 2021. We simplified the tax incentives and distinction between different types of funds, the pension and the provident funds, and we started encouraging introduction of tax-free savings plan, and encouraging good value retirement products and services by reviewing costs. So between 2012 and 2019, but all along the talk of the two-pot system was on everyone's minds. And today, there's still many reform that's currently being discussed that will follow two-pot, but what we're doing with the two-pot is we are putting a peg in the ground. We are saying somewhere we have to draw the line so that this problem we have got does not escalate. We are doing something to resolve that. And the two-pot system is going to create better outcomes at retirement for everyone. It addresses two problems. One, COVID taught us that there will always be instances where there's severe financial distress that is around, and we need to create a opportunity for members to actually access their funds when such distress is experienced. But at the same time, we need to create the better outcomes by preserving retirement savings of the members. And that really, in a nutshell, is what the two-pot system does. So if we start looking at the two-pot system, I think I can stand here for 3 or 4 days and talk about it. Every time I think I know everything about the two-pot system, someone will ask me a question and I will have to scurry away to go find an answer. But effectively, what does it mean? It means from 1 September, the two-pot system will come into effect to allow members one withdrawal per tax year from the fund that they belong to, or the funds. It is also there to protect the future retirement benefits so that we can create better outcomes for members when they do retire. From 1 September, members' fund credit will be split into 3 parts. We know that there are some hidden underlying pots, but for the purpose of our the others just now. But very importantly, that members must remember, and employers must remember, nothing changes up until the 31st of August. The benefit rights, the entitlements, everything that the member was entitled to up until the 31st of August will forever be applicable in terms of the laws that applied until then. This two-pot system only relates to the accumulation of contributions from 1 September onwards. Change in benefits only takes place with those accumulated contributions from 1 September onwards. There will be no change to benefit rights as accumulated up until the 31st of August. So the two-pot system will only affect future contributions, and very importantly, these changes affect, it is compulsory. It's not a voluntary system that is being put into place. So you can see the little to live with the word pots. So very importantly, what happens with a member's share of fund or fund credit as at the 31st of August. And remember, I think there's also a lot of confusion. A lot of people are thinking, come 12 o'clock the 31st of August, something's going to happen. No, it's not going to happen 12 o'clock on the 31st. Something will happen with the member's share fund or fund credit as at the 31st of August. What will happen with that fund credit is that in order to give members a head start into their savings pot, the legislation says that 10% of the fund credit, up to a maximum of 30,000 Rand, will be transferred from out of the member share fund, and that will become the seed capital transfer in the member's savings pot. So if a member's fund credit as at the 31st of August 24 is 200,000, the 10% of that is 20,000. 20,000 Rand will be transferred out of the member share fund and will become the seed funding in the member's savings pot. If the member has got a fund credit of 700,000, 10% of that is 70,000, but the law says a maximum of 30,000. Therefore, only 30,000 will be transferred into the member's savings pot. Once that transfer has happened, the member now effectively have got 3 pots of money, or 3 pots. 2 of them at that stage will, two of them, at that stage will then have money in it. 1 will have no money in it. The vested pot is what remains in the members of the member's share fund after the seed capital was transferred out. The savings pot will then have the amount that was transferred from out of the member's share fund, and the retirement pot will have 0. So from that point on, we can see that the vested pot will then be the pre-1 September balance. No further contributions will ever go into that vested pot. That vested pot is then paid. That is the member's benefit entitlement up until the 31st of August, in terms of which, where I mentioned earlier on, the laws will never change. The legislation as it applied to the member up until that date, that member will forever be entitled to claim the money in terms of what the laws said. The savings pot will then have the seed capital plus, from 1 September onwards, 1/3 of the member's net retirement funding contributions will be allocated to the savings pot. The value in this pot, and this is very important for members to understand, the value in this pot is intended to be the cash lump sum a member can get at retirement. Hence the 1/3, that is where that comes in. So their retirement pot after 1 September, 2/3 of the member's contributions will be allocated to that pot. And that pot is intended to purchase an annuity or pension for the member when they one day retire. So we can see here now what happens, because if one thinks of that, there's going to be 2 very distinct categories of members. It's going to be members that were members of a fund as at the 1st of September. They're going to have those pots. Any new members that join a retirement fund from 1 September onwards will only have 2 pots. A savings pot and a retirement pot. And it is said that if a member joins a fund from 1 September onwards, at the age of 25, that member will accumulate 2 to 3 times more retirement savings than a member that joined before them. And that is the power of this 2-pot. Because that is going to, for our children, our grandchildren, this is the future of retirement funds. They are forever going to have enough money when they retire. And that is what's being done. And what is happening, and getting back to what Lihle said earlier on, you know, the world is looking at South Africa. The South African 2-pot regime that is being put into place is powerful. Many countries overseas have introduced, they didn't call it 2-pot, they maybe called it something else, similar type of regimes, but they have not worked well. They have not always worked well. They worked well certain aspects of it and others didn't. And the world has shown tremendous interest in this 2-pot system that South Africa has introduced. And then contributions from 1 September will be split between the savings pot and the retirement pot, and that will exclude arrear contributions will still have to go to the vested pot. So only contributions from 1 September onwards is applicable. Older members, and here it starts getting a little bit more complex, because we know 1 March 2021 annuitization was introduced into our laws, and we said from that point onwards, money that accumulates for a member, you can take 1/3 maximum when you retire, whether you, prior to that it was always that for pension fund members, but from that date on we basically did away with the distinction between pension and provident fund members. However, at that point, we did not want to disadvantage members that were already older, and they split out the members over age 55. So when two-pot comes in to play, what will happen with those members? Those members are automatically excluded from two-pot. Those members can choose to participate in two-pot. They will have a period of 12 months from 1 September 24, so they effectively have got until the 31st of August 2025 to decide whether they want to participate in two-pot or not. Once they've made a decision, they can't change their decision. And those members also get a seeding transfer from their vested pot, also max 10% with a maximum of 30,000, and their seeding balance will be calculated on the last day of the month that the member opts in. So if the member opts in 31 March next year, their seeding will be calculated as at that date. So here we get to the part where members are mostly interested in, withdrawal claims from the savings pot. So the legislation says that, apologies, this thing is making a noise here. Members may make withdrawals from the savings pot. It's one of the big reasons why the two-pot system was introduced. They allowed one withdrawal per tax year. A tax year runs from 1 March to the end of February each year. So a member can only have one claim in a tax year. The minimum that a member can claim is 2,000 Rand. Member must remember though, the 2,000 Rand is not necessarily, if a member claims 2,000, it's not to say that is what they're going to get, because there could be some transactional fees that's deducted from there, and of course SARS is also going to take their chop. There's no maximum. So if after 5 years a member has accumulated 200,000 in their savings pot, they can withdraw the full 200,000. So there is no maximum. But the member must remember, unlike a withdrawal benefit from your pension or provident fund that's taxed at the withdrawal tax table rate, a withdrawal from the savings pot will be taxed at your marginal tax rates. That's your very high tax rate. So if a member claims one, from a tax perspective, it is not such a good thing. But we understand there are instances where financial distress is experienced and members need to claim. But it's going to be taxed at the higher rate. Also, SARS, if the member's tax affairs are not in order and they owe SARS money, SARS will issue an IT88 for the fund to deduct the arrear taxes from that benefit. And then very importantly, any withdrawal from the savings pot will reduce the lump sum available at retirement. So it's like a prepay. You prepaying from your cash lump sum at retirement. Every time you pay from your savings pot, it reduces the amount of cash that you are entitled to at retirement. So think of it this way, because once one works things out, it becomes quite complicated. But the easy way to think of it is a member that joins the fund for 2024. That member has only got two pots. A savings pot and a retirement pot. Savings pot is supposed to be his 1/3 cash lump sum at retirement, because a third of his contributions are going in is building up. When the member retires, through the member's life, every time they take the savings withdrawal claim, it reduces the amount of cash they're going to get at retirement. So they keep their savings pot before they retire. They're not going to be able to get any cash lump sum at retirement. A member with multiple retirement contracts can claim a withdrawal from each of those. We do have members that are paid up members in other funds. The member is allowed to claim from both of those. And where membership is terminated and the member has already claimed from the savings pot in that fund in that tax year, and the savings pot has less than 2,000 rand, the member is allowed to claim it. If the member leaves employment and they've already claimed in that year the balance of their savings pot, they must choose to transfer to their new fund, or they're going to have to wait until next year before they can actually get their money from the savings pot. Termination of membership, resignation, and welcome back to the vested pot. No change. Remember I said the rules stay the same. There's no change to your vested pot money. The member can claim the full amount in the vested pot as a cash benefit. The member where the pot is transferred to another fund. So the member can choose either take it in cash or transfer it somewhere else, same as currently. And where the member needs to transfer from the vested pot to the retirement pot, the right to choose increase the retirement pot by the retirement pot. But once that decision is made, the money the transfer reversed. Savings pot is the members of the current tax year and wait until the following tax year before they can claim. Unless the balance amount will be subject to margin taxes and also there might be a transaction fee. From the retirement pot. The retirement pot remains reserved until the member retires. What happens when the member retires? This is where it becomes a bit more complex as far as the vested pot is concerned, because we get that annualization that came in March 2021, and that means that up until that point, if a member was a member of a provident fund, they could take all the money in cash. From that point on, we know that the contributions then was treated as pension money, and when the member retires, they could take the tax of 1/3 in cash. The balance of that must then be used to purchase an annuity. So it could end up, this is where Lichle's different pots come in. It could end up that whilst the member has got three pots, they have got some underlying pots sitting in the vested pot. A vested, we've now started referring to it as pre and post annuitization portions that is held in the vested pot. So whichever fund the member belongs, savings pot, the full balance can be taken as a cash lump sum. That is that. And then purchase an annuity and obviously the minimum newer members when they retire, when they haven't contributed very long, they might as a cash lump sum. Certain funds are excluded from the two-pot. This was written into the legislation. I'm not going to go into a little touch on unclaimed benefit funds are excluded from the two-pot, and so those relate to deductions for housing loans or housing loan guarantees, claims, maintenance orders, or employee liabilities towards the employer, whether all three pots. Pot. Yes, a member can transfer money from the vested and savings pot into the retirement pot. Once transferred, the retirement pot cannot be transferred back. It can be done, but they must retain their same character. So if a member transfers to a different fund, the vested saving retirement from the transfer raw fund to the fund receiving the money must be allocated in the same proportions. All pots must be transferred to the new fund as is, and they cannot be separated. Transfers across funds can only happen upon termination of membership. We're going to quickly look at just a few examples. Contributions. From 1 September on, we're saying Labone contributes 1,500 Rand a month. That's her net retirement savings contributions. How will that be split? 500 Rand of that will go into Labone's savings pot, and 1,000 Rand will go into her retirement pot. Nothing, no contributions ever will go back into the vested pot. An example of a claim, we said the member can claim once a tax year from the savings pot. Minimum amount is 2,000 Rand. Any claim amount will be subject to deductions of transactional fees and tax at marginal rates. So it's very important for a member to understand. Member submits a claim, they've got 22,000 Rand in their savings pot, and they want to claim 12,000 Rand. The member must understand that the 12,000 Rand is not what is going to be paid to them. The member will receive the 12,000 Rand, less tax, less a fee. The net amount is 9,200, and that member will then have 10,500 left in their savings pot. Any amount claimed from the savings pot will reduce the available cash lump sum at retirement. And in this instance, that will mean that the cash lump sum that Johannes would have been entitled to when he retired is now reduced with 12,000 Rand. Not just with the amount that he claimed, received, but with the actual amount that he claimed. Examples of no claim. On 1 February, Johannes submits a savings pot claim for the amount of 8,000 Rand. Johannes has already submitted the claim from his savings pot in November 2024, which was then paid. The fund advises Johannes that he can only make one claim per tax year, and the tax year is March to February, and Johannes can therefore not receive another claim until the following tax year. Agnes is 1,820 in her savings pot, and she submits a claim for an amount of 1,500. We know the legislation says the minimum that someone can claim is 2,000, so the fund will advise Agnes that she does not qualify at this point for a claim. The role of the employer and the role of the member. The administrator of the fund will determine the claims process, and claims from the savings pot is made by members and does not need the employer's authorization. So the member can submit a claim without the employer having to say, yes, here's the form, and an authorized signature from the employer's side signing the form. The member does not need the employer's permission to submit a savings withdrawal claim. But from the employer's perspective, and the member also needs to understand that, the member's tax affairs needs to be in order. The member's tax number, as it's held on record with SARS, must be up to date. If the member submits a savings pot claim, the administrator needs to apply for a directive, similar to what we do now. SARS will send a directive back and show the administrator the amount of tax that must be deducted. If the member's tax number is not up to date, not valid, or the member's never registered, the member's not going to be able to claim. Because one, then the administrator is not going to be able to apply for the tax directive, and secondly, SARS won't be able to issue a tax directive back. And then there will be a problem. And for that reason, it's very important also that the members' personal details, tax numbers, ID numbers, passport numbers are all up to date as held with the fund, because most funds will use a validation process in a fraud mitigation to ensure that there's not family members now claiming the members' savings pot money. I know Anu is going to talk about the Conduct Standard 1 of 2022 a bit later, and therefore it's very important that the contribution schedules and contributions are submitted to the administrator timeously, because if not, it's going to have a massive, massive impact on the possibility of a claim. One of the Financial Sector Conduct Authority's key points on their risk mitigation document that they issued is their concern about the number of queries and complaints that's going to arise because of members' inability to claim, because fund records are not necessarily up to date, or contributions might be in arrears, whatever the reason. And for that reason, that is imperative that that is dealt with adequately. I'm nearly at the end. These are just some of the frequently asked questions from employers and members. May a fund or an employer decide not to join the two-pot system and let things carry on as they are? No. The two-pot system is compulsory for funds, public and private sector funds. And that's why a big part of the delay in getting the legislation ready was because the legislation now had to bring into its folds funds like the government employees pension fund and those. It's compulsory for all funds. From 1 September, may a member or an employer choose the percentage of the contributions that goes into the savings pot or the retirement pot? No. The law says 1/3 and 2/3. That is what it actually uses, and that is what must go into the savings and the retirement pot. Into which pot do additional voluntary contributions go? It will also be split 1/3, 2/3. The law actually says all contributions, whether they AVCs or whether they normal contributions. A member only started saving in their retirement fund after 1 September. How does the two-pot system work for them? I've explained that earlier on. Those members will only have a savings and a retirement pot. Will the starting balance in the savings pot be 30,000 for every member? That is a very big misconception. Many members out there, even in the Treasury session we had, public session, many members think they're going to be able to claim 30,000 Rand. No, you're not necessarily going to have 30,000 Rand, because if your share fund is only 50,000 Rand, only 5,000 Rand is going to go into your savings pot. Only from there on will the 5,000 Rand start increasing with your contributions. Member says, I want a bigger starting balance in my fund savings pot. Can the employer or the fund make it bigger? No. The law says that is what your starting balance will be. If I take a retirement savings from my savings pot while I'm still employed, do I have to pay it back to the fund? No. But you can't, retirement savings, I suppose that's silly wording, you're eating away your cash lump sum, you can't pay it back. You can only pay 1/3, 2/3 after your seed funding. Do I have to take money out of my savings pot, or can I take it later than 1 September? Yes, you can. You don't need to ever take money out of your savings pot if you don't want to. You can leave it there until you retire. If you don't need it or you don't experience financial distress, you don't need to take it. Even once you retire, you don't have to take what's in your savings pot as cash. You can decide how much cash you need and then take that and use the balance to transfer to your retirement pot to increase the pension that you're going to get every month. And question that has come up a lot also: what happens if I'm a foreign national and my work permit ends in 2 years? The legislation has made specific provision for foreign nationals and for persons that immigrate. For foreign nationals that's here on a work permit, once your work permit expires, the legislation makes provision for you to actually take all your pots out as a cash benefit. And I think that is the end of my story. Thank you very much for listening to me. Lihle, did you want questions to run now, or I know you guys have got a Q&A session later today? With your Q&A later. Perfect. Thanks very much.
Thank you very much, Geraldine, for such a comprehensive presentation on how this system will be working. And yes, we will be having a Q&A session a little later on, so you will have the opportunity to ask questions. Also, just the slides that you have seen here will be circulated as well at the end of the conference. One of the things that struck me from what Geraldine said is that if members owe SARS and they withdraw, say, from the savings pot, then SARS can take that money. And you know as employers that if I see that my money somehow has been taken away, I don't run to SARS, I run to you as an employer, which is why it's so important to drive tax compliance as soon as possible with your employees and update the crucial information of employees. We're going to be hearing now from the Financial Sector Conduct Authority. And one of the things about the Financial Sector Conduct Authority is that they expect funds and administrators to submit rule amendments as well to give effect to the two-pot system. They've got their own deadline and they'll tell us about it. But that is important because if there's a failure to submit these rule amendments, then that may mean that the savings withdrawal claims may not be paid from the fund. And again, that is going to upset some of your employees, because then if they can be making any withdrawal, they'll have problems accessing the money and they'll look to their employers for answers, and that could result in difficult labor relations for employees. So please help me welcome now. Okay, I'm just told that they want us to take a quick tea break. And then when we come back, then we'll be hearing from the Financial Sector Conduct Authority. Anan Malay will speak to us after the tea break. Just to confirm, Readiness, how much time for the tea break?
20 minutes.
About 20 minutes. We are already running 40 minutes or so behind, so if we can please stick to the time during the tea break, we'd really appreciate it. We'll see you in 20 minutes time. Thank you.
Yes, maybe. You can see what I'm trying to do.
consequences also of this two-pot system. And I'd like to welcome Anu Anand Malay, who has 40 years of experience in the field of retirement planning and law. She holds a BA, LLB, LLM, or postgraduate diploma in financial planning law. She's an admitted advocate, certified financial planner, and this 40 years of experience is in retirement fund industry. She has held various senior positions over her career. Currently the CEO of Optimum Employee Benefits, has been appointed as an independent principal officer to various funds in the industry. So please help me welcome Ani.
I guess it's still good morning, so good morning everybody. Everyone can hear me. My presentation today will have the following agenda. So we'll talk very briefly on Section 13A of the Pensions Fund Act and what the requirement is from the employers. We will go through the FSCA Conduct Standard 1 of 2022. This is quite important because there are some differences where certain sections relating to contributions had changed and certain were repealed. It was replaced with this conduct standard. And then following that, and talking to that, also the FSCA Communication 15 of 2022. And then we just look at the impacts and the consequences of employers not contributing or submitting information to the fund timelessly. So I know the presentation is very legalistic, okay? And so just bear with me, indulge me, but there's important facts in there which I just like to refer to, and that's why I put it there. So when they do circulate the presentations afterwards, you can have and then sort of assimilate all that information. So without further ado, let me enter. 13A of the Pensions Fund Act and Regulation 33 was replaced by this conduct standard that we're going to talk about, right? So it sets out the requirements with regard to the payment of contributions to funds. Employers, we know generally on occupational funds, they're required to pay over contributions to the fund within 7 days of the end of the month to which they relate. Trustees are required to ensure their contributions are paid in accordance with the Act. So this conduct standard puts a huge responsibility on the board regulations and apply their minds to all the new conduct standards and legislation that does come to the fore, right? So if contributions are not received timely from the employer, the interest on the late payment of contributions are payable by the employer. That's a really important thing. It is a legal note. It's a standard that is issued by the FSCA. The FSCA is our regulator. That's the Financial Services Sector Conduct Authority. And so we have to comply with that. If we don't comply with that, they can take the registration away from the fund. They can get charged to take the tax approval away from the fund. They can disband the Board of Trustees because they're not doing their job. So there's a whole lot of implications to that, right? So this particular conduct standard sets out the process for the collection of contributions, the information required to be submitted to the authority on a monthly basis, the information that is required by the administrator on a monthly basis, and the amount of late payment interest on arrear contributions. So you can see it's quite a detailed conduct standard where administrators and funds had to put processes in place to make sure that it's actually followed through. So just high-level requirements related to the payment of pension fund contributions, right? A fund must notify when an employer participates or starts a new fund. The fund must notify that employer prior to the commencement of that employer's participation in the fund annually, right, of the employer's duties, their obligations, and liability under this section of the Act, or section of this conduct standard. A notification referred to in a paragraph, and I'm not going to mention the actual numbers here because they're going to sound like bus numbers to you, so I'm just going to read through the legislation that will be available afterwards for questions. by a fund to an employer, and it must be made in a format determined by the authority. When you're submitting your contributions, but they're also telling you explicitly what information it is that they want. Okay? So the FSC conduct standard requirements are summarized as follows. It stipulates the minimum information that employers have to provide in terms of Section 13A of the Pensions Fund Act to all administrators and retirement funds. It obliges funds to report employers that contravene and don't comply with these sections of the Act. Okay? We will talk later about the consequences if there's non-compliance. It also stipulates the rate of interest payable on late or unpaid contributions. Now, before this wasn't stipulated in the legislation, the funds applied a rate in terms of the Usury Act, an interest rate related to that, right? What is the effective date of these changes? So the effective date is actually long gone, and funds have just not complied religiously, right? So the earliest conduct standard was 6 months. The effect of the earlier conduct standard was 6 months after the date of publication. This conduct standard was published on the 19th of February 2023. So it means by March, April, May, June, July, by August 2023, we should have really have applied this, and this has not been done. And you can understand then from a FSCA point of view, because they're the regulator, they're not happy with this outcome, and they've been making more demands on funds and boards of trustees to ensure that this is done. What is then required from the participating employers? Okay? The participating employers must provide all the requirements on a monthly basis, and we'll go through the requirements just now as I unpack it. They must ensure that all eligible employees appear on the employer. This is also to make sure that you have up-to-date details of your membership at all times. Now, administrators will depend on what information comes through via the employer's payroll, because that information becomes part of the security validation or verification when they're actually going to pay out claims, etc. Right? The other thing is that maybe I should just bring to your attention, and Marwan Davids, he's going to be speaking about it later in his presentation, because MIBCO is on this huge system enhancement drive, and they're rolling out an easier process for employers to complete this information in an electronic format, so that it's easier for MIBCO to also receive and allocate the contributions accordingly. So we said the commencement date was February 2023, and from that date, all contributions should have actually complied already with the new data requirements. Now, some employers are actually compliant, but we do have a few delinquent employers, and they're probably also the employers that are not at the session to actually learn about it, right? So, but there's always a few bad apples in a basket, and then it causes grief for everybody else, and then the FSCA will come back and put in more conduct standards to manage that, right? Late payment interest in the conduct standard now has been prescribed, so it says that interest on arrear contributions is prime plus 2%, so no more will the fund use a percentage from the Usury Act, for instance, or a call rate of interest or whatever it is that the funds use, right? The amended wording makes it quite clear that funds do not have a discretion in this regard, so they have to apply the prime plus 2%. According to the FSCA, the standards provisions on late payment interest will replace the Government Notice 397 of 12 May 2010, because the interest previously was based on this particular Government Notice. Section 103 of brackets 5 of the National Credit Act, the interest on unpaid amounts may, their strategy is that the interest on unpaid amounts may not exceed the principal debt, inclusive of the costs associated with the recovery of unpaid amounts. So if your debt is a certain amount, your arrear contributions, your interest can't exceed that amount. That's what the National Credit Act says. But that applies to commercial contracts and doesn't really apply to retirement funds, right? For retirement funds, and this whole thing about the interest falls into the indifferent rule, which is a common law principle, where if your interest exceeds your debt, it ceases at the amount of the debt. The Motor Industries Fund had sought legal opinion from senior counsel on whether this rule actually applies to late payment interest on retirement fund contributions, and the current legal position was confirmed that this rule does not apply to penalty interest. So here, if you owe more than your debt, you will have to pay more than the debt. Okay? What will happen then if the employer does not comply? So remember, the FSCA conduct standards is law. All employers must comply with it. There's a whole process that follows if you don't comply. So after 90 days, the principal officer will have to advise that the matter gets lodged at the SME services. They must open up a case for Section 13E contravention, etc. Currently, the problem is that SAPs actually are not aware of this contravention. They'll tell you that they have more important cases to look at, like rapes and crimes and burglaries, etc. And so the FSCA is on a drive to actually educate the South African Police Services to deal with these employers that are that contravene the Act. So there are further requirements in the conduct standard, but it's important that I just run through it quickly with you. Part of the process is then the administrator must, within 15 days after the minimum information contribution statement was due, it was that list of things I showed you that you have to supply details for your membership. They need to report it to the principal officer of the fund or the monitoring person. And then that report in detail includes previously unresolved matters where the minimum information and actual contributions do not reconcile. They do allow a discrepancy or a variance of 2.5%, right? But if there's some huge variance, then it should be investigated to say you're underpaying or who are you not paying for, etc. The principal officer or monitoring person must then, within 7 days of that report, report to the board regarding the compliance of 13A. So what I'm trying to show you here is that the fund doesn't make up these rules. It's actually prescribed in this conduct standard. So it puts a huge responsibility on the fund to make sure that this process is followed through. The board must then ensure that any contravention is brought to the personal attention of each member in writing, and that is why it's so important for them to have the members' details. Okay? The members probably will then put pressure on the employer. Obviously, you know, we would like these things to work out quite amicably, but it doesn't happen because the problem arises when a member withdraws or exits the fund and they're looking for their benefit and they say, but I've been contributing for so many years and months, this doesn't add up to my benefit, and that's where the problem arises. So we're trying to do an awareness program to make sure employees actually understand the impact of them not submitting their contributions timelessly. So where members cannot be identified, it will be brought to the attention of all the members of the fund, of a specific employer within 30 days of that report. So there's a timeline to each step of the conduct standard. You know, so it's not that we want to get the employer into trouble, it's that the employer needs to be aware that members have a right, and members' rights are being prejudiced if they are not paying their contributions over in time. The board then within 30 days then reports the cause of action and the remedy to the contravention to the FSCA. So there's a reporting requirement to the regulator if this is also not done. And then after another 14 days, to SAPs in a prescribed format. So that they're working on at the moment, trying to make SAPs aware of this as a case that they can open, on which basis they can open the case, etc. And so that when you go to the police station and report it, something is done against those employers. It is still continued contravention after that, after the members have been advised in writing. There's another process that follows within 14 days after that period. So compound interest on later unpaid amounts is prescribed, as I said, prime rate plus 2%, and may not exceed the principal debt due to the in respect of unpaid amounts. Now this thing was all clarified when I said to you this is a common law principle and it didn't apply to our senior counsel advised that we will the in-duplicate norm is not applicable to MIRF. The interest then shall constitute investment income for the fund and is payable by no later than the end of the second month following the month in respect of which the amount is received or the value is transferable. The one thing that you also need to know is the motor industries funds, because they belong to a bargaining council, Their bargaining council fund, rather, not that they belong to the bargaining council. What happens is that they, just lost my train of thought there. They are, okay, we'll come back to that. Where the recovery of arrear contributions is outsourced to an attorney. So now an employer hasn't paid for 3 months. What do? Right? The board's hands are tied. What does the administrator do? The administrator is sending reminders. MIFA, the collection agency, is sending in reminders. Nobody's doing anything. You have to then appoint an attorney to send a letter of demand to that employer. Okay? Then obviously when appointing attorneys to the fund, because whatever service providers you appoint to the fund, the end user is the member. And so costs are distributed across the fund, right? So we want to make sure that when we engage service providers, we be cognizant of the fees, that fees must be reasonable, and we know attorneys can be quite expensive, right? So that is for the board to ensure that whoever they appoint is someone that their fees will be reasonable. The board must then enter into an agreement to ensure that the recovered amounts must be paid into the fund's bank account within 7 working days of receiving that amount. So if the lawyer does manage to get some money from that delinquent employer, they need to pay it over to the fund within 7 days. So it's not sitting in the lawyer's trust account gaining interest, right? The agreement must also include the fee structure and steps to be taken if the employer fails to pay, anticipated timelines, and the frequency of reporting. So when you sign up these lawyers to the fund, you actually sign an SLA with them with timelines and agreements to say when things will be done and how they will be dealt with. So that sort of covers the conduct standard. Then after that, the FSCA issued a communication 15 of 2023. And in this communication, they emphasized that Regulation 33 was repealed, and it set out the process of collection of contributions to follow when the employer defaulted on payment of contributions, right? It also clarifies, goes further to clarify the payment of late interest. So there was a debate on when interest must be paid from, which date it must be paid from, right? So the access must be calculated from the first day following the expiration of the period of which such amounts were payable until the date of receipt by the fund. Then the one section of the Act provides that any contribution to a fund in terms of its rules shall be transmitted directly into the fund's bank account, and it says not later than 7 days after the end of the month for which a contribution is payable. And then if we go to the conduct standard, it says it must be calculated from the first day following the expiration of the period in respect of which amounts were payable until the date of receipt by the fund. Now you might think, it's sort of neither here nor there and we're playing with words, right? But just look at the impact of it. So the FSCA, and they're the regulator, right? Their interpretation of the above is that late payment interest must be calculated from the day after the 7th day because you allowed a 7-day lead period, right? Which is the 8th day of the month from the following the month for which contributions are due. The pensions fund adjudicator, on the other hand, has a different view, and they said it is due from the first day of the month following the month from which the contributions are due. But we obviously go with the FSCA's understanding of it, or the conduct standard, because they are a regulatory body. They're authorized by the Financial Sector Regulation Act to issue conduct standards, whereas the Office of the Pensions Fund Adjudicator investigates and makes rulings in respect of claim lodge, and they don't really have any regulatory or statutory powers. So that is why we choose them to go with the view from the FSCA. What I did want to say to you about the Bargaining Council, and it just came back to me, is that for the funds have a 30-day exemption, right? Which means instead of the 7 days that I've been talking about on occupational funds, these funds have 30 days in which to make that contribution. Okay, so it gives you some leadway for the employee to say, okay, you have a problem at the end of the month, you have 30 days to pay that contribution. But if you exceed that 30 days, then we start putting this whole dispute resolution process in place. But it's something that must be done because members are compromised, right? And let's just talk briefly then about the consequences and the impact this has of no contributions, right? So if you don't pay contributions, at least pay over the risk contributions, because members won't have risk benefits if those benefits are not paid. It's like any insurance. You don't pay the premium, you're not covered for the risk, right? So if the event happens like a death claim or a disability claim, then it's actually a problem, because who pays the member? The employer then becomes liable for payment of that risk benefit, because the beneficiary in a death claim can sue the employer and claim that benefit, or a disability claimant in a disability claim can also pursue the employer for payment of the actual benefit. So that is what, 3 times the member's annual salary. It's quite a big amount. So it's really important for employers, if they are having liquidity issues or cash issues, to rather just pay the risk premiums over to the fund, so that the members are covered for this, right? The other thing, Geraldine spoke about the seed capital and the savings account. If members' contributions are not up to date, right, it's 10% of whatever is in your vested account, your savings until that 31 August 2024, 10% of that to a maximum of 30,000 will be transferred to your savings account. Right? If the contribution, if the members, the employers are in arrears with their contributions, right? They're not going to give them lead time to say we'll do it 3 months later or something when you pay your contributions 90 days later. They will have to calculate that seed capital at that point in time. Because remember, at 31 August 2024, it's going to be an automatic system sweep of all the members' accounts into the savings account. So the members will be prejudiced because they won't have the full amount that would be actually due to them. Okay? And then also in the savings account, if employers continue not to make their contributions to the members, to the fund timelessly, it means whatever's in your savings account for every tax year is going to be short of contributions. So that doesn't provide savings for members in case of emergencies, right? Because remember, that account all starts the 1 September 2024 with a 0 balance. If it wasn't for the seeding capital, your savings account would also have a 0 balance. So if employers are not paying, the member could have nothing in the first tax year to actually pay, to actually access. And that's going to cause a huge problem with members, right? It's also reputational risk for the fund and the employer, because why isn't the fund doing what they're supposed to do in terms of making sure the employers pay their premiums across, etc. Right? From the employer side, I mean, will they be popular with members, and by word of mouth, employers' reputations can also be damaged, right? The FECA is also naming and shaming employers in quarterly lists that they publish to the public and to the media in terms of which funds have contravened this legislation and which funds have not paid their contributions across. So if anything, there's definitely reputational damage out there for those employers. The other big thing is that if an employer deducts money from a member but doesn't pay it over to the fund, that's a criminal offense, right? And they can be arrested for that. And that is why for all the participating employers, it's important for the administrator to hold on record who the responsible person is. And the responsible person is the person that is responsible to make that payment to the fund, right? So the other result of non-compliance is obviously fines, imprisonment, and penalties. And I mean, it could also result in the FECA wrapping the knuckles of the trustees or disbanding the board or whatever the case is, because, and it's not that the fund wants to bully the employers for certain information, it's a requirement by law that they have that information on record by the administrator. And then lastly, complaints. Can you imagine the extent of complaints that's going to come through, both to the Office of the Pensions Fund Adjudicator, and to the FECA, and to the administrators, and to the fund, because members will be querying the amount of their contributions. So with that, I think I've given you a lot to think about. And I'd just like to thank you for your indulgence, because I do see a lot of interesting faces. I haven't seen anyone fall asleep. I was worried about that. So thank you very much.
Thank you so much, Ami. Clearly, there's a lot to really comply with. Yes, please. And I think maybe part of the reason you're seeing these faces is because there's some nervousness, because you're talking about the consequences here of employers not paying their contributions and the name and shaming that may also ensue, the reputational damage as well for the companies. But we have heard now from the stakeholders, so we're going to get a response from MIFA and also get to understand their own state of readiness. We've got Readiness who will be joining Ronald Mohotlani to give us this response from MIFA. Readiness is a seasoned professional with over 20 years in the financial insurance services industry. She joined MIFA last year in 2023 as executive responsible for stakeholder engagements. She holds a postgraduate diploma in management, master's degree, masters of philosophy in inclusion innovation. She's quite passionate about creating good experience for the customers or members that she serves. She's also passionate about empowering herself and others through education, hence her commitment to ensuring that MIRF's members and stakeholders are empowered through education and communication. Ronald as well will be joining her, studied pension law through UNISA. He has over 20 years of experience in retirement management. He joined MIFA as well last year as an executive for fund operations. He's also quite passionate about driving operational excellence. Please let's welcome Ronald and Readiness.
Good morning, everyone, and thank you for this opportunity to present to you MIFA's readiness in implementing two-pot retirement system. The first slide will just give an overview of our membership and potential members that would be coming forward to claim their savings withdrawal. We have split these memberships into members that would have an amount on their savings allocation greater than 2,000, which you could see that's about 48% of our membership, and members who would not be eligible to claim on the 1st of September, but obviously as they accumulate more savings, they will then be able to claim, which is about 38,000. And then we have members who were 55 years of age as at March, and we have around 50,000 of those members. Now, obviously, these members will be eligible to claim once they've selected or opted to participate in the two-cost system. So, just from these numbers, we can see that we're expecting quite a huge number of our membership to claim savings components. So, obviously, our strategy has to be aligned to these numbers to ensure that members are able to access this benefit. So we came up with a strategy that we need to achieve for us to be able to implement this two-pot system successfully. And our strategy was to look at our data enrichment. This involves collecting data which will assist us in the process, which is things like text numbers, contact details, and I think some of those Anu has alluded to. Obviously, it is important for us to have this data, one, for the ability for us to verify members when they come forth, and for us to be able to communicate with members when they've claimed, and do text directives and so forth. The other is increase awareness. We have a responsibility to educate members in terms of what is the two-pot retirement system, what components are there, obviously, as well as to educate members in terms of the risk that comes with claiming from savings pot regularly, because there are consequences to that as well. We have to look at reducing barriers, meaning we need to make sure that members are able to access this benefit easily and make it possible for them to do that in the comfort of their homes. We also looked at improved responses. With the volumes, there comes a responsibility for us to make sure that our infrastructure is able to handle the volumes that will be coming through. As well as collaborations with our partners, which are stakeholders, MIBCO, the funds, and other stakeholders to ensure that we increase our capacity to communicate with members, and working together, we are achieving that. We then had to look at what is our strategy enablers. For us to implement this system successfully, we need things like rule amendments, which have been drafted and submitted to the FSCA. We also needed to look at our infrastructure. As indicated, those numbers show that we are expecting quite a huge number of members to claim. So we had to make sure that our infrastructure is secure, member information and data is also protected. So we implemented cloud services to just increase our capacity to process large volumes of claims. We looked at cybersecurity, as indicated that it's important that we protect our IT infrastructure as well as member information, which was done. We then looked at disaster recovery to ensure that should an unfortunate event happen, we are able to continue with business and continue processing those claims. We also looked at what platforms can we use that will enable members to be able to submit claims. We looked at the mobile app. We started off with the process of registering because we need to drive members initially to register to be able to access the savings component. That process is complete. We are currently in progress on working with savings withdrawal processes. So that is in process and soon to be completed. We then had to look at our administration system. We use Everest, which is an administration system that I think about 80% of administrators use in this industry. And within that system, we had to look at things like seed capital allocation. This is the 10% or 30,000 rands allocation as an initial seed capital. That is complete. We looked at savings withdrawal process that have been developed and we have tested. That is also complete. We looked at contribution allocation. So going forward from September, as indicated, there will be 1/3, 2/3 split in contributions. We've worked on that process and it works perfectly. And the next one is member terminations, because we are still expecting members to retire after September. So we are working on that as well. And then we looked at how are we going to then roll out this registration process to our members. We looked at, obviously, the administration enhancement, system enhancements. We looked at digital access, which is the mobile app, which is zero-rated, meaning that there is no cost to members to access the mobile app for them to claim their benefits. We looked at the risks in terms of what are the risks that we might face when members use our platforms. So we also included certain features in the app for us to be able to reduce the risk of fraud, which are things like facial recognition, which is linked to Home Affairs database. When a member registers on the app, we're able to identify the member that is the correct member. We looked at bank validation. Of course, we need to verify whether these members have got active accounts and if those active accounts are in their name. And the process of registration, we do it collaboratively with MIBCO, as well as employer. And by this, we are introducing self-service kiosks for members to be able to register. And these are for members that do not have smartphones, with obviously the assistance of staff should they struggle to go through the process. And these would be put at MIFA branches and possibly with some employers. So the next is just a presentation overview of how the registration process is done in the app. I hope everyone can see. So this is where a member would enter their ID details, name and surname. What then will happen is we will validate that member to check if the member is a member of our funds in the system, and that validation, once passed, the member will then go for a facial recognition functionality. And so the member will capture their face, and that will be validated with Home Affairs. And once that's verified, the member will then create a password, which will be used later when the member logs in. All right, so obviously the password will need to meet certain minimum criteria for it to be safe and secure. And once the password is created, the member will be able to update contact details that we already have for those that we have contact details for, and they're able to update those or capture them. And this information will then be stored in our administration system. The member will then capture their banking details, and these will be verified with the relevant bank that the member banks with. And then once that is verified, the member will then continue to capture the text numbers for those that we do not have. And this functionality, members will be able to enable their biometrics should they wish to log in future. They can use their fingerprints or still facial recognition or a password. And these are just the components that the member will be able to see once they've successfully logged in. The members will also be able to generate benefit statements from the app or view the historical benefit statement as well, so they'll be able to do that at any time they wish to. And these documents are password protected for obvious reasons. And that's the functionality so far. So this is just the registration process that we have fully developed and is now in production. And very soon we will be encouraging members to start registering to avoid, large people of the 1st of September trying to access this benefit. Thank you. Any questions?
Thank you, Ronald. So I am going to talk about our stakeholders and our plans in terms of rolling out what Ronald has just spoken about, and many more. I'm sure the question on the floor right now is, will we get a video of that, the registration process, and how to guide our members for the employers and for the members? Yes, definitely. It is in our plans in terms of rolling out and making sure that all our members and participating employers understand how to engage with us or to access us through the different channels. What Ronald has spoken about was one of the channels that are accessible and available for our participating employers and our members to engage with us from an education point of view or from communication, pure communication. I thought let's talk about who our stakeholders are as MIFA. Our stakeholders are employers. Our members are very important to us as well. MIFA employees are a big stakeholder for us as well, because we need to empower our employees to make sure that they're able to serve our customers and you as participating employers. We also work very closely with our partners, and we consider them as our key stakeholders, because through our partners and our partners channel, we're able to then share more information across to our members and employers. Our partners, we have two employer associations, which is FRA and RMI, and we use them for their platforms to be able to share that information. So employers on here in the room will probably go onto RMI website or will probably engage often with RMI, same it will happen with FRA. And so we're using our partners channel to be able to share the information. We also partner with MISA and MISA. My colleagues are in the room, I know, to share a lot of information for members. So we are not just limiting our members to just accessing us through MIFA partner platforms, but we are making sure that we extend the platforms in which we're able to share our information with our stakeholders, particularly the employers and the members. Our intention in terms of stakeholders is to communicate, educate, and empower. We need to make sure that our members and participating employers know us as MIFA, know the services that we provide for them, know how to get hold of us, know when to get hold of us, know that we are there to provide help when they need us. All right, so in terms of our engagement approach, we have separated into two folds. We have been on the ground, we have been engaging with our participating employers and members in person, but we know we have 230,000, just over 230,000 members of this fund. It's going to be very difficult for us if we're going to have to do it face-to-face. We understand that instances where face-to-face is probably the only approach that we can take for a particular group. However, we are driving our digital channels. In terms of face-to-face approach, in terms of our strategy is for establishments that do not have infrastructure to connect us digitally, we will show us, we'll conduct the sessions in face-to-face. We will come to your establishment, we will engage with you, and we'll engage with your employees. And we have been receiving a lot of those requests where employees are saying, please come talk to us, talk to our employees. Where we can, we would appreciate to engage digitally. There's forms, there's different ways. We're happy to do a WhatsApp call, we're happy to do Teams call. There's many ways that we can engage with our members through digital. However, in instance where that is not available, we're happy to be on site. Please, towards the end of this presentation, I'll also provide the details on how to contact us to ask us to please come to your establishment to talk to the employees. I've spoken about employer sites. We also partner with our partners. We are on MISA's YouTube or social media in terms of sharing information with our members, so we can also direct our members there. There is a video actually on the MISA website, on the MISA YouTube, yes, that talks about the two-part retirement system. So please use our partner support. It's not just MISA that we're working on in terms of using their channels, but many other. We also have engaged with our people, with our members and participating employers through central venues, and this is one of the central venues that we will be engaging with employers and for members. I've already spoken about the digital channels, and in here we appealing to our employers to say, if you have infrastructure and facilities for us to engage with you and your members through digital channels, please direct us to these sites. We are on social media, we are on Microsoft Teams, we are on the website, MIFA and MIRF website. There's a lot of information, including the videos around what two-pot retirement system and how prepared are we as the fund. We are on WhatsApp. We have over 50% of our members registered on our WhatsApp, and we're going to use WhatsApp to communicate with our members. If I can please ask the employers to please encourage the members to register on WhatsApp, because we're also going to use it as a channel for communication. At the moment, I know that members are only able to get few stuff from WhatsApp, but we are extending the options and the facilities on WhatsApp. And then we've spoken about the MIFA app. Ronald has spoken in detail about the MIFA app. And as part of rolling out to make sure that our members and employers know what two-pot retirement system is and how ready we are as MIFA, we have a plan. In July, we will be in Limpopo, Mpumalanga, and KZN. I saw someone is in the room. In August, we will be in Eastern Cape and Northern Cape. September, Free State and Northwest. October will be in Gauteng and KZN. Please, if you want us, if you would like for us to come and talk to your people in person, or you would like to engage with us through the digital channels, who will be in these provinces, please send us an email and ask us to please pop in. We will do so. Besides being in face-to-face in the formats that we have articulated, we're also going to be very active on Facebook, on LinkedIn, on YouTube, on SMS and WhatsApp. So we are making sure that members that can access us in person will be able to do so, but there's a lot of information on our social media or on the digital platforms. So if we can please encourage our members to keep looking for information. There's a lot of information that we're going to be posting there. How to get hold of us? Please send a request via email to engagement@mifa.org.za. Please provide location, province, date and time, number of employees who will be attending a session or who you try to arrange a session for them. And please also, because we also understand business is very important. Your business comes first. So when we are on site facilitating these engagement sessions, we do not want to disrupt business. If you can please just confirm how you want us to deal with the groups. If you have 700 people, tell us how you're going to group them and what's the number of sessions that we're going to have. We're happy to align with your plan around that. And then just quick call to action to our employers. Ms. Geraldine spoke a lot about this. These are very important for our employers to take note. And this is what we're asking in terms of a partnership with the employers, is one, please help us to collect member data. It is important. I know that Anu spoke about it, Ronald spoke about it, and I know that the speaker that's going to come later on as well is going to talk about it. It's very important. It helps us to build or to give our members good experiences when we have complete data. Please help us with member contribution. There's been a lot of conversations around that, the importance of making sure that those contributors are correct and on time. The big thing that we're asking is please give us access to the members. We will not just walk into your establishment and demand to see the members. We're asking a partnership on how we're going to do this. We have to get to all our members. And we're happy to drive, to fly to where your members are, if that's the only way we can connect with them face-to-face. But we need you to help us to get access to them. We've provided the email address. Please write to us and ask us to please come to your site. IT88 issues, a lot has been said about it. Section 37D, a lot has been said about it, and correct deductions of the pension, Standard Bank pension-backed housing loan. This is also important for employers that know we do have, our members are able to take a loan with Standard Bank and use their retirement savings as collateral. And there is a process that employers are required to do, which is to deduct the monthly payments for those loans. It is important that those are paid, collected on time, correctly, and they are paid over, so that when a member comes and asks for their money, we don't, or at that point, only then have to deal with all of this. Thank you so much. It is the end of my presentation. Thank you very much.
Thank you very much, Dumetsi and Ronald. I'd like to take this opportunity now to bring in members of the panel who will be taking questions from you guys. I hope you have prepared your questions, whether you are watching this virtually or here. So please help me welcome panelists who will be taking your questions this morning. If they can please come through and be seated here. We are going to have roving mics. We've got some roving mics that we will use across the room for any of you that have got questions. So can I please have Norma Kumalo, who is a MIFA Independent Director, to please join us on stage. Mantuka Maisela, who is the MIRF Chairperson. Can we please have Lihle Khoza as well, the MIFA CEO. Dumetsi Mokele and Ronald, who just presented here, also to come and join us on the stage, and we are going to take some questions from you guys. There are some questions that have come as well online that we will go through, but we've got roving mics, so if you don't mind, please do raise your hand for questions that you have. If you want to direct them specifically to someone, or you just want the panel to weigh in on them, they will respond to that. So Norma, Mantuka, Lihle, Readiness, Ronald, please, if we can come on stage. We wait for some of our stakeholders here to ask their questions. Someone wanted to know, while members may be pleased that the two-pot retirement system will allow access to the funds in times of emergencies, how will MIFA help their members to achieve holistic financial wellness and better retirement outcomes?
Thank you, Chairman, for that hard question. I think, firstly, let's just, as Geraldine has said, remember the context of this, at least the two parts, the particular part being the saving part. Before this piece of legislation, retirement funds and the regulator and the trustees of retirement funds really were focused on a particular outcome happening when the member goes on retirement. They laid the best retirement administration and investment strategies. So these funds have got some of the best returns, but the problem is because there was nothing that was addressing the financial distress or vulnerability that consumers was experiencing before retirement age. It was undermining all of that. So first of all, it might look like a free-for-all, but it is trying to say a human being won't even enjoy the best laid out retirement plans if currently they can't eat, they can't take their children to school. So in a way, by addressing then that immediate short-term need, members are now first of all compelled to take annuities when they retire. They will have pensions, they will no longer have access to that money in cash, whether they resign or whether they get to retirement age. So that's the first lever. But beyond that, regulation has always been driving around creating affordable products. Again, something that was mentioned today. So prior to this, there was a default regulations that came into effect, and they asked that boards of trustees, together with their service providers like MIFA, put together preservation strategies. So the next stage is to engage our partners, MIRF board as well, to say, how can we now put together a very sustainable or cost-effective preservation environment for this retirement component? It's not enough to say, oh, it's there. Where must this member take that retirement component that they can't take in cash? We need to engage with the funds, to the principal officer and the board, to say, how do we create preservation solutions? But beyond that, there has to be retirement counseling that happens when members retire, to look at their holistic financial wellness, because retirement counseling mustn't now again go back to the old world of where we're thinking about retirement date. We have to think more cleverly about how we educate and we provide retirement counseling to the members to say, what are your current plans? Almost moving more towards holistic financial planning than only planning for retirement. Otherwise, we're going to keep on having members accessing these savings because they're not solving for debt, they're not solving for whatever is continuously creating distress in their world. So I think the simple answer is now, once we've implemented this, MIFA can start to engage our ecosystem to say, how do we create cost-effective solutions and improve the quality of the retirement counseling that we are offering to identify what is really driving members' access to these savings. Just because they have them does not mean that they should be accessed. We need to understand better what are the financial pains that members have that are leading them to these savings components.
All right, thank you so much, Norma, for responding to that. I'll come to your questions in a moment. There's one for Mantuka that says, what is the fund's investment strategy? Where is my money invested in, and can a member choose where they want their money to be invested? Please, can we pass the mic?
Thanks for that question, Clement. As you are all aware, or you might not be aware, that the retirement fund and the investment investment strategies are regulated. Usually, the FSCA sets regulatory standards like regulation, it's called Regulation 28. Regulation 28 stipulates how funds should be invested, what vehicles they should be invested in, the quantums that needs to be invested in. So us as trustees tend to follow what the regulation says, comply with what the regulation says, because there are penalties if you do not comply. But within our funds as MIRF, we also look at the transformational agenda of the financial services sector. We have decided that 15% of our funds will be allocated to emerging asset managers, especially women asset managers, because they've been underprivileged over time. They've worked for these big asset management companies, the Investex, the Alexander Forbes, the Sanlams, the Old Mutuals, but when they go on their own, they're said to be inefficient, they're suddenly deemed to be inefficient or incapable of managing funds. So 15% of our assets are managed by emerging asset managers, and then others, 85%, are managed by what we call emerged. Within those emerged, there are also competent black asset managers. Now, our allocations, as I indicated, are in the hands of those, and our fund is very liquid. We cannot allow anyone else to decide on how and where the assets should be allocated, because we're not all trained in asset management or in asset allocation. It is a highly regulated environment. You have to be qualified and to have a license to do that. That is why when you listen to the banks, they always say we are a financial services provider, licensed financial services provider. So an individual member cannot decide how and where their assets should be allocated, because they will never be allowed to do that. Firstly, because they don't have the skills of doing that and the license to do that. Only certified asset managers and asset consultants are allowed to give advice on asset allocation and to also allocate or invest our assets. Our asset managers are very competent. Our asset consultant is Rescura. We've had Rescura for quite a long time. They do come to us and indicate, before they do give assets to anybody, they do a thorough due diligence to check whether that asset manager is competent enough to look after our money. And when they see that the market is volatile, they do rebalance or they reallocate the money. For instance, we've got offshore investments. When the rand-dollar exchange is good, they are able to rebalance or do a tactical asset allocation and allocate where they feel they can yield better results. They do, the regulation also regulates how much we must invest outside South Africa and how much we must invest inside South Africa. So that is the investment strategy that we are following. And I must say, our fund is very liquid. Our fund is ready for the two-pot system. We do have money readily available. As I indicated, I think we have about maybe 20% of our assets that we can liquidate should people want to withdraw money. But personally, I feel whilst we have accepted the two-pot system, we are going to experience problems where people are not necessarily going to use it because they're stressed, but they might be tempted to use it for luxurious things like buying cars or whatever. But I must really thank the trade union for having actually pushed their point of saying our members would like to have access to the money, and also thank other industry bodies and the government for listening and coming up with a two-pot system to ensure that they relieve the pressure, that financial pressure that people have, and people cannot resign anymore and want to hang on to their money, and then they create a social problem for us. There's something called black tax. I'm sure a lot of you know. At the end of the month, there's an uncle wants 5 rand, another one 50, another one 30, with the promise that they'll bring it back, and they never ever bring it back. So yes, we cannot decide on where, an individual cannot decide on where their money should be invested. And I think our investment strategy is watertight. We have a competent board of trustees consisting of 3 strong, intelligent women and 3 strong, intelligent men. Thank you.
Thank you very much. Nantuka, thank you. I've got hands that are up across the room, so we'll start here. Please can we have the mic here?
Good morning. My name is Boyo Makakula. I'm fairly new in the industry, so I'm going to ask basic questions. So earlier it was presented that we have board of trustees and we have 5 funds. So I just want to know if the board of trustees that we have serves all the 5 funds, or there's different board of trustees in the different funds. And then the second one is the one around the issue of the fund investment, to find out if MIFA has an obligation to go to members and perhaps do roadshows. We've seen it with other funds. They do roadshows, and this is where the questions around the issue of fund investment is being addressed, because then people say our money is going employer-employee contributions. This is where the money is going, but we don't know where the money is invested and where it is done. I know on the website there is information, but that information session is always important. I mean, we see other funds saying, you know, we're going to, because of your age, now you're almost towards retirement, and therefore we're going to put you in this, we're going to give this strategy and whatnot. So I just wanted to find, is there an obligation for MIFA to do roadshows on that? And I think the last question for me is that the MIFA mobile app, I understand that the presentation was saying that the app is going to be functional very soon, and I just want to know how soon will that be, so that there is not going to be traffic by the 1st of September. Thank you very much.
All right, thank you very much. I've got other hands, I'll come to them. Isek, if you can maybe take the question around the different funds and whether the Board of Trustees serves them, and between Readiness and Ronald, the issue about the app and the obligation around roadshows and explanations around fund investments.
Thank you very much for the question. I'm going to answer the question that is geared towards the composition of the Board of Trustees. We said we have 5 funds. It is true, we have 5 funds. The one fund, the Core Parties Fund, is a deferred benefit fund, which means in the olden days, a deferred benefit fund is the fund where when you retire, you get your 1/3, and then the other 2/3 become it buys an annuity that will pay you monthly. And there's a differentiation between membership. Unfortunately, that differentiation still exists. There's white-collar workers who belong to, or some of the funds who belong to, I mean, members belong to the core parties, and that core parties has got a board composition of those particular companies who belong to core parties. There are 4 boards, there are the 4 funds. They have a board of trustees that I mentioned that has got the 6 board members. However, the investment part of the 5 funds are invested through the board that consists of 6 trustees. The core parties formulates the rules, they formulate the other strategies pertaining to those particular companies, but the fund that manages the 4, they do the pension, I mean the investments. They also distribute the benefits, the death benefits and disability benefits of the 4 funds. So there are 2 different board of trustees, one for 4 and the other one for 1. I hope it answers your question. And then I'm going to ask Lihle to address the one question. And the one issue that you mentioned was, where do we invest the money? You could be walking past a shopping center that belongs to you, that technically belongs to MIFA because you invested in it. You could be walking to a factory that part of our money might have been invested in. You could be going to the stock market and there's money invested by ourselves. You could be going offshore in London and see a large building. It might have a MIFA money. It could be anywhere. And the beauty of knowing where money has been invested in, which is a very difficult question to ask always. You'd remember during the riots, the people of Soweto refused for Maponya. They actually literally protected Maponya Mall with their bodies 24/7 because they identified with it. They identified with the money that Nedbank and Liberty invested in there, and they said, you are not going to ban our building. And in most townships, the same thing happened. People said, you are not going to ban our asset. So our assets could be anywhere. Some could be in roads, infrastructure, some could be in renewable energy, some could be in student accommodation, or anyway, where we can yield high returns. That's where our money is.
Thank you, Chair. The question on the availability of the mobile app, we can confidently say to the public it will be available in August. At the moment, we have selected a few employers whom we are going to be going on production with them. And the reason for that is that the approach for the release is to make sure that if there's any technical glitches, any bugs to be fixed, we are still able to do that in a contained environment. And once everything is good to go, then by the end of July, we will be releasing it to the public. So please expect our requests to engage with you, to engage with your members in terms of a structured registration process, and also just getting feedback from the members who will be accessing the app for the registration processes. We will appreciate that very much. Thank you.
Thanks. I'll take the last question around MIFA's obligation to engage members to be on roadshow. It is an obligation that we honor. We are on the road, and that's why in my presentation I spoke about the partnership that I would like to strike between ourselves and the employers to help us to roll out to many members. Please invite us to your establishment. The important thing is we do not want to disrupt business. There are facilities that we're able to work in and we get access given permission, but for most times we have to have an appointment. So we are definitely on the ground, but it is not, we have not been rolling out quite a bit. If you remember my slides, I've also shown where we will be across all the 9 provinces in the 4 months. So it is an obligation, but also it is a responsible thing for us to do. More than just it being an obligation, it is responsible for us to do that, and we love doing it. We're asking the employers to please work with us and help us to drive that mission. Thanks.
All right, thank you very much. There's another question right at the back. A question, anyone with another question? Oh, right there. There are 2 hands to the right.
Hi, this is Tikebedi. I'd like to know about the 2-pot system. If the money in the savings also gives interest when sitting in the savings pot.
The mic is with me. Yes, all the 3 different pots will be aiming investment return. So the investor component, the savings component, and the retirement component.
I think Readiness have answered you. Remember, this money doesn't sit in our office or somewhere else where we keep it. it's being invested. As I said, it could be in any investment vehicle where it earns returns. It could be in cash, it could be in money market, it could be in any other investment return. When the need for withdrawal happens, that's when that money gets withdrawn. Like when you withdraw your money from the bank, that's when the money is then that's when we access the money to pay to. Quite good. We do have money that we can readily liquidate to pay people. So it does end. I think Readiness have answered you. It does end investment.
I actually have two questions. The first one, I wanted to know with the savings pot and the retirement pot. Can an employee decide to put extra on the savings alone without on the return? So the company is contributing for me and deducting from me. I want to voluntarily add money onto the savings pot. Okay.
All right. The second question.
Okay. My second question is regarding exemptions. The provident and where there's a situation where it's contributing to another fund and the exemption is in process. I have seen that we then get notification that we are not paying over to MIBCO. However, we already pay out to MIFA or to the other funds. However, we're already paying over to Alexander Forbes or another fund. How does that work where I think the exemption has been going on since 2022? So the delay is not on the employee side, the delay is on MIFA side or whichever fund that we're in. How does that work? Because then when an employee leaves the company is actually double, if I can say, contributing to the employee. For the employee, however, we're not deducting double from the employee. When an employee is terminated, then the employee goes to MIFA and claim, and then they go to Alexander Forbes and claim. I don't know the legalities about it, but if you guys can maybe explain.
All right. Thank you very much for that.
Thank you. I'll take the first question and Lithia will deal with the second one. In terms of contributions, I think earlier on it was indicated that the split in contribution is legislated, being that 1/3 goes to your savings component and 2/3 to your retirement component. Similarly, if employers wish to contribute more than the prescribed rate, employees are welcome to do voluntary contributions. Similarly, those contributions will also be split in a similar ratio. Of course, the more you increase your contributions, the more you pay voluntary contributions, the more your savings account will grow, and the more your retirement component will also grow. So I think that's the only way you can try and increase the amount to which you will be able to withdraw later.
So on employer exemption, first of all, you shouldn't be with Alexander Forbes. Let's start there. It's our strategy to persuade you to come back. That's why this thing is going on for this long. On a serious note, the exemption process, you've highlighted rightly that it was within the MIBCO ambit, and our understanding is that you are a member of the Motor Industry Retirement Fund or you are a participating employer up until you are granted an exemption. One is going to come up, do a presentation on the system enhancement at MIBCO. I am always very careful not to speak on. So I will request Marwan to take that question and just clarify the process of employer exemption. But we will still want to engage with you.
Let's take some more questions. There's one in the front, one over here, and you can start there, and then please bring the mic to the front.
Good day. Coming back to the pots, I would like to know, on the 3 pots, the growth on those 3 pots, are they going to be the same or are they going to be different?
The fund has got an investment strategy that is standard for the fund. It has not been differentiated in terms of for this particular pot. And I think we further engaging in terms of there is a need, but as it stands, we have a standardized investment strategy applicable to the entire fund.
Another one?
I just wanted to say, remember, as a fund, we don't have 3 pots, we have a pot. However, the money is sitting in different vehicles. When we invest it, we don't say, hey, this one is for the invested pot or 3 pots or whatever. We have all your funds, therefore we invest your fund in your interest. We try hard enough to make sure that we put the interest of the member first before we put anything first.
Thank you. May I please stand up? Thank you. Mine is not a question. It's actually a big concern regarding our industry. It's a concern, and at the same time, I would like to invite the General Secretary of MIBCO, the CEO of MIFA, and the PO of the fund. I'm saying this purely because colleagues, and there's a big problem regarding these delinquent employers. Why I'm actually saying I'm inviting them, please sit together and come up with a plan on how to deal with these delinquent employers, whom I would like to be blunt a bit, who are stealing money from employees by collecting that money, and that money does not reach the fund. I think something has got to be done here. It pains me when I hear, her presentation earlier on that they're not getting enough support from SAPS. I think something has got to happen. And I think if at all you can actually know, is a lot of money which is sitting with those employers who are not doing something by sending the money to the relevant place where it's supposed to go. I'm saying this because I saw one of the employers was not even bothered after collecting the money. And the sad part is when the employee died, the family come in there, there's nothing. Can you imagine? So I think, please, as I say, I'm inviting the 3 of you. I'm aware about the 2-pot system is a lot for you to do, but please, after this, just sit down and come up with a plan. And please, FSCA, support this. Because something has got to be done about it. We cannot actually go on this way where an employee's money is being deducted and it does not go to where it's supposed to go. I'm representing an industry where most of the employees there in that industry, they're not really highly paid. Can you imagine that particular individual, if at all the family is hoping to get money and the money is not there? So that's why I felt strongly that I think here there is a lot of support which is needed. And also, I think I shouldn't leave out also the labor movement. There's MISA in this room, there's NUMSA in this room. Please come together, let's have something done about this. We cannot go on this way. Because people are working, their money is being deducted, but somebody there who's my colleague or who's another employer, he just sits there with his employees' money. I think definitely something has got to be done. So I thought let me just come up with this part. Thank you so much.
Thank you very much. And of course, we're going to have another panel discussion where NUMSA and the other stakeholders will be represented. So we'll give them an opportunity to respond to what they will do to address that. Can we take the last question over here?
Thank you again. My question is around the fund benefits. I just understand that On the risk benefits, we, under the death benefit, I don't see that we do have a funeral benefit. I could be wrong. And if we do not have, what is the reason? Because I see most of the funds do have a funeral benefit, and it helps a lot, particularly in the space where, in my community, it really helps. And I find that the employer that I work for have to cough out money to try and help. And I think for us, it's a big problem. But maybe let me understand, like I said, I am new.
Thank you.
They said I must take this, I don't know why, but I'll pass it to the chairperson of the fund. But just from my view, so I think to the point, the question you're asking earlier, we have to get to the point, this is information that we need. We need to understand what is it that leads people into financial distress. It could be, maybe they need to meet funeral requirements, but I'm sure there's a history to why the fund is not offering the benefit internally. Maybe, Chairperson, are you able to respond to that?
Thank you, Director Nama. So whilst the funeral benefit is not a retirement benefit, it's a voluntary benefit that funds can subscribe to. However, with the economies of scale in terms of members that the fund has, it's something that one, employers have raised, and they have requested for the fund to look into a funeral benefit. Number two, there has also been requests from the employee representatives, which is the organized labor, to look into it. So we are in a process in terms of looking what are the alternatives that we can put in place so that members could be assisted. It must also be borne into consideration that when we put a funeral benefit in place, it also means that there are contributions towards retirement, not towards retirement, but there is a premium that is to be paid, so that also will increase the contributions towards the fund, because that's how we pay premiums over. So we're looking into it. We have had the concerns, and specifically from organized labor and employers. We also view this as a competitive edge for the motor industry retirement funds, because at some point some employers are leaving us because of the comparisons with these benefits, and we do not have this benefit. Thank you.
All right. Thank you very much. Please, you take the last question? All right.
So there's 2, 1, 2, then 3, 1.
All right, let's take them quickly. If you don't mind, please can you stand? That's just a request from the videographers here.
Okay, my name is Tommy Matlango. Just a question around the app. Does it cater for foreign nationals in terms of registration? And this is on the backdrop of, on the MIBCO system, we experience challenges in terms of updating details for foreign nationals. So now, in light of this app, being introduced, will it also cater for foreign nationals in terms of registration?
Thank you. Another one?
Hi guys, so the question I think is mainly to also to just find out what they do with the road shows. I'm not sure how they would have structured them, but in some of the information that you'll be sharing, do you probably maybe have considered having some sort of financial counseling or advice for the people who are going to be withdrawing their monies? Because I think that, as the chairperson had said, some of them might just withdraw for financial distress of wanting a new car, and to only find out that they have not solved any of their other problems, and now we are sitting with an employee who's just still financially frustrated, and they have now taken out their money.
Thank you. Last one.
Cool. And this one is from YouTube. They're asking if can a member withdraw their full benefits before the two-pot system comes into effect?
Thank you very much. This will be the last question because we're just trying to chase time now. Go ahead, Ronald.
Thank you. I'll deal with the first question. So foreign nationals will be able to register. The only difference is whilst the registration process includes verification in Home Affairs, we are unable to verify foreign nationals via the same channel. However, what they will do is to go to one of our MIBCO branches or employers. When I presented, I did mention a kiosk. So what they will do is obviously present themselves there with their passport to just check that this is the right person that is registering. That's the only purpose. But we are able to verify those members in our database because they are contributing members. But once they've done their physical registration, we are then able to proceed to pay their claims. So they will be able to register and they will be able to withdraw from the savings withdrawal as well.
Thank you.
So the second question was whether members are allowed to draw before the 1st of September. If I'm not mistaken. So members are allowed to withdraw anytime, obviously subject to the rules that operate when they do those withdrawals. So whether it's before September or after September. Certainly we would not want to encourage members to withdraw because they are thinking that their money is going to disappear. That's not the case. But a withdrawal process will always be a process that is accommodating in the voluntary retirement fund industry. So it's no different.
Can I just comment a bit on the withdrawal? I think the spirit of today is all about members being able to solve financial distress as opposed to losing your job to have access to money, because your withdrawal simply means you are resigning from a job. And in a country with such high unemployment rate, I don't see that as a sound financial plan on the part of a member. You're leaving one thing that's able to give you income until you're in your 60s in order to have access to a portion of money. It might be big when you read it on the benefit statement, but that money is going to be taxed, first of all, and up to 36% of that money is taxable on withdrawal. So really you are giving away more than a third of that money because you just don't want. I know you've got financial distress, but how much more distress are you going to be without a job and your children without a parent with an income? But adding to that, I think one thing members must always be aware of is this portion around taxation, and I think we will also talk to how much financial counseling is going to go to it. Essentially, you are giving away a limited amount of savings to the taxman to solve a problem. It really, I always say, even the Tax Act allows you to avoid tax, not to evade it. You know, that avoiding tax is always one of the best financial plans you can put in place. So I hope the message, you know, on YouTube and on Facebook, on Teams, and also in this room we take back is, let's be mindful of the day you get to 63. Our economy can no longer sustain, a high dependency rate. How much is a SASSA grant? What can you really do with a SASSA grant if you get to retirement and you do not have any form of savings? So I just wanted to add that bit. Sorry about the timing of it, but in the spirit of this room, and as we leave this room, and as we go into other rooms to educate, let's educate around the piece of solving for financial distress as opposed to completely leaving yourself vulnerable and unemployed.
I think as we are sitting in this room, we are experiencing teachers and nurses whom when the voluntary retrenchment or voluntary separations were done in the mid-90s, 94, 95. A lot of teachers took their money thinking that it was a lot of money. Today, they are all poverty-stricken, and most of them are suffering because when they apply for a grant, they check whether they've worked for the government, and if they have, they don't qualify for a grant. So we are trying to alleviate a social problem rather than create a social problem. A social problem that is created by you yourself when you know that there are other alternatives of ensuring that your financial stress is alleviated. So the purpose, as Norma says, is to try and assist and not to try and create a bigger problem for you in the future. Pension is meant for when you retire and not when you can still work for yourself and you can still find employment or look for employment. Today is very difficult to find a job, let alone anything. Quitting the one that you are in is very difficult. The grass is always greener on the other side. So rather retain and stay in the current job that you are having and accumulate more retirement savings than liquidate your retirement savings because you don't know what the future holds for you. Thanks.
Thanks, Chairman. I think the other, Director Nama spoke about being unemployed, but there's also two other issues. If you resign, you lose out your death benefit and a disability benefit. If anything happens a month after you've taken your money, if you pass away or you are disabled, you could have had 3 times your annual salary. Your family is going to be left with the 100,000 that you've got from your resignation as opposed to 3 times your annual salary. So it's very important when you talk to our members, when we have the sessions, we encourage them to understand the implications of that resignation. All right, and then in terms of when we are with members, communicating, educating our members, we also emphasize on financial counseling. We work very closely with the Optimum Group in terms of retirement benefit counseling and financial advice. As MIFA, we are not licensed yet to provide that service, and so when we are on the ground with our members, we will educate them about the two-part retirement system and the implications, but we also offer the services that are offered by the Optimum Group, which is retirement benefit counseling and financial advice.
All right, thank you very much for that. I'd like to then release you guys. Nauma Kumalo, Mantuka Maisela, Lishe Koza, Ritimeti Makele, Ronald Mohotani. Let's give it up for them. Because we're really chasing time, I'm going to request Marwan David to come and give us a presentation around technology in enhancing data collection, part of what Lisa spoke about and Ronald as well earlier on. So we'll do that presentation. If we can please keep it for about 10 minutes, that would be very, very helpful so we can get into the last panel of the day.
Good afternoon, everybody. Marwan Davis from MIBCO. Tom is just getting the presentation up for me. I hear all the stories of admitted attorneys and all these types of things. I'm an admitted mechanic. I was in the motor industry before, and I can tell you one thing, that when you're there in the workshop, you don't really understand or care what is happening with retirement funds. To me, and those employers, what they worried is what am I taking home? If there's tax issues, I go to my boss. If there's any issues, I want my boss to sort it out. And that's the narrative. That's just how it is. So, very difficult for them to understand all of these things. And I'm glad that the employers are here so that they can interpret this and take it back to the employees in a very simplistic way. I think that's very important. You stand and you listen to presenters speaking about 3 pots. When you speak to a guy in the workshop, he's going to ask you, is it a cast iron pot, stainless steel pot, or ANC pot? At least if you tell him it's ANC, it's with some value. So Tumi is just trying to get a presentation up, is it? Okay, doesn't want to come up, I'll speak to it. Is that fine? Alright, I've got 10 minutes. They've asked me to cut down my times. But really, what is the self-services portal? The self-services portal is a portal that was developed by MIBCO. And the portal is really to ensure that in terms of the MIBCO role, I'm glad that speakers have defined the roles. Role clarification has been given. I think Feroz has mentioned that. That it's important to understand what the role clarifications are. So basically, when you speak to people, or when our agents go out to people, and believe that MIBCO has got designated agents, so if you're unable to get information from MIFA, we assist MIFA in that way. So when our agents come out to do regulatory compliance inspections, any employer and any employee can ask them for information and they'll gladly assist as well. So we work hand in hand with MIRF, and we work hand in hand with MIFA, and our agents have got the information and they're able to pass on that information. So they enter into the workplaces on a day-to-day basis, and you can reach out to them at any time. So as we said, this is a collaborative effort. Don't just think it's MIFA and MIRF only. You can definitely reach out to MIBCO, and you can reach out to MIBCO through our agents. We have got a lot of agents in all the provinces. We have got 20 offices around the country, 14 satellite offices, and 6 regional offices. We attend and we assist all walk-ins or any person who wants assistance. We're basically seen as the collector of information. I think Feroz said it earlier, technically. But we're also seen as the processor for claims. It is our job to ensure that the verification of information is correct, to prevent any fraud, and to ensure that when the payout happens through MIFA, or transfers happen through MIFA, and that the fund has to act on their duties and report these things to the FSCA, MIBCO is able to give our partners the correct information. That is essential. So you have all these facilities through MIBCO, and those facilities are in place to ensure that we provide a collaborative service. This service will be available very soon. It will be launched in August. Early August is when we anticipate. At the moment now, as we speak today, our teams are out there testing the system and we're registering our first liable person. So what it basically means is that in terms of the conduct standard, 1 of 22, there's literally 2 things that an employer must comply with. One has always been in place, and it's something that we do. We collect your returns, we collect your contributions, and we pay it over to MIFA, and it goes for all the investments and all the beautiful things that they're doing. Number 2 is to verify and ensure that the employee information is correct. So when withdrawal happens and the claim happens, whether it's a generic claim or a 2-pot claim, that claim can be processed and be paid out to the correct person. that is essential. We've always been trying to enforce these things. And I'm glad that Mike spoke up and mentioned that we have to do something to enforce it. It's been very difficult to do that. We've been using everything that we know of in terms of our regulations to enforce and try to get employers to pay over those contributions. Because we know how beneficial it will be. It is a benefit for those employees and those members. But to no success. And that's why you have speakers saying, we have to do something to ensure that that money is collected. But since the introduction of this conduct standard, it basically means that there's a legislative requirement for employers to comply. If you do not comply, we don't have to go the criminal law route anymore. We don't have to go to a police station anymore. We simply say there's a law. You did not update your information as required, which prohibits us from possibly paying a claim. You did not pay over your contribution, which prohibits us from paying a claim. We as MIBCO know you did not do that because we can see on our portal that you have not updated information. We can see on our return system you have not paid your contributions. Our job is, as MIBCO, to promote, monitor and enforce. We've monitored and now we will report it to the PO to enforce. So what that conduct standard says is that the PO will report to the correct authority that a contravention has taken place and a penalty will be instituted. Not a MIBCO penalty, it's an FSCA penalty, which is possibly a 10 million rand fine for the liable person, or is it 12 months imprisonment? 10 years imprisonment, okay. I'm being very lenient, you know. It shouldn't make me Minister of Correctional Service. But that's basically how it goes, people. So what will happen is we're already taking care of the online returns and the contributions. We've got our online return system and we monitor and we manage according to that. So we've got, now what we've introduced is we've introduced the self-services portal. And that self-services portal will be available on the MIBCO website in August. Employers will be able to register the liable person responsible for updating employee information. It can be the same liable person who attends to the employer's or the company's returns. Or it can be a different person. The conduct standard doesn't say it has to be one. It can be two people for different things. But this portal, and in that portal we will have a function called Membership Information Update. Employers will go in there, the liable person will be registered, and you can update that employee's information. In terms of the conduct standard, or those 14 minimum requirements that Anu has showed you, and additional information that we require. Remember, those are minimum requirements. We've added a few more things. And this is why this is a premier fund. Because with those few more things, we can assist our members better. If we can't reach our member, we say, in addition to the 14 things, give us another contact person. Give us the next of kin. Give us another email address. Because we know how these things happen. People change their cell phone numbers and we can't reach them. They've applied for savings of their two-pot and now they just walked away and you can't reach them. So in addition to that 14 requirements, minimum requirements, there's more information that we request as MIBCO. And in support with this, and I'm glad Leetle said it, is that yes, employers have been exempted. They have been granted exemption not to belong to what we call our industry fund. So we've got 23,000 employers in the motor industry, plus minus, over 305,000 employees, and with our funds, we probably have in excess of 270,000 members belonging to this fund. So with all of that, what we're saying is that even if you are exempted, you will still use this portal and you will still update your employer information. Because not only does it provide a service and is an enhancement for members of the industry fund, but it can also assist exempted funds. It also assists with MIBCO with the enforcement of other regulatory requirements. So we don't just use the conduct standard in isolation. We use the conduct standard in conjunction with MIBCO regulations as promulgated in terms of the Minister of Department of Employment and Labour, which is our administrative agreement. The two combined makes this a unique proposition and makes this a standout or standout industry funds. Your Auto Workers Provident Fund and your Motor Industry Provident Fund. So there's a lot more that we can do. We have agents that can chase after non-contributors. We have agents that can enforce on non-compliance on behalf of the fund. That is a function that you will only get with an industry fund as opposed to an Alexander Falk or some type of other fund, is that you have an enforcement mechanism by default that can ensure these things happen. And please do not look at MIBCO as the stick. When we say enforcement, we mean that we are there to support you, to ensure that you do not contravene, to come to you with our agents, tell you what you need to do and help you to do what you need to do so that you don't get into the trouble, so that you don't have to be faced with a penalty. Our agents and the MIBCO team is there to assist you. That's what we mean when we say enforcement. Doesn't mean that we're going to come in and be, wield the stick. So colleagues, the self-services portal will be on the MIBCO website. We will send out communication in July. We will help employers register the liable person for updating employee information. The MIBCO has also got facilities of our online return system. That is what you use to pay your contributions. Remember those two things. You have to pay your contributions and you have to update your employee information. We have a return system to pay your contributions, and we will now have a self-services portal with an employee information update function to assist employers to comply. MIBCO doesn't have to comply. The funds don't have to comply. The legislation says you as an employer, it's your job to update that information. We are giving you the facilities to do that. Those facilities will come in August, and you will be able to register your liable person, and you will be able to do that. So, from my side, colleagues, Clement, I think I'm covered in my 10 minutes, because a lot of people have explained the role clarifications and explained the legislation, previous speakers. But from our side, as a MIBCO side, is as a partner of MIFA and MIBCO and MIRF, we now have this liable portal coming out, and you can expect to see communication from us in the very near future. So from my side, remain compliant, pay your contributions, and update your employee information. There's facilities to assist you. Thank you, Clement. Thank you.
Thank you so much. Thank you, Marwan. There is going to be lunch that will be served at the Clover Green restaurant at around 1:45. It's just to your right outside this venue. So we're going to be wrapping up soon. I would like to invite the following people, just the various stakeholders, before we bring in Lihle to give us our vote of thanks, just to hear what their experiences have been and what challenges have been affecting their constituencies. So can we please have Jeff Mulife, who's with the retail industry, who's the labor director, please, if you can join us on stage. Regis Sibia, who is the CEO at the Fuel Retailers Association, please also come on stage. From NUMSA, Lerato Madela is a representative there, a regional motor organizer. Please also come on stage, and let's also bring in Sonia Katzen, who is the manager for media and communications for the motor industry staff. Thank you so much for coming on stage. Maybe let's just start with just the major issues or challenges that are affecting the constituencies that you serve, and how you think MIFA can partner with you to resolve those. And then we'll raise some that came during the Q&A as well. You can just respond to that, all of you, with the mic that you have.
Thank you, Clement. From our side, the first thing that I need to mention is the economic fluctuations. The kind of challenges that we're facing as employers, they vary, but the main one is economic fluctuations. With regard to that, majority of employers are facing financial difficulties. They are unable, to get profitability, unable to get people working to their workshops to service them. So we're having challenges in that environment, and I must indicate with regard to the recent new vehicle sales statistic report, it has indicated and showed that there's still a downward slope since August 2023. We're still experiencing a downward slope even currently, especially in the new vehicle sales. It is important to mention that with regard to that, according to the report, in June 2024, which was last month, it's about 40,072 units that were sold. So that's quite low, compared to June 2023. It's actually 14% loss, comparatively speaking. So that's what we're facing currently in the space of dealerships. And it's important to mention the fact that we're having a very weak consumer and business demand in the industry at this stage. And as a result, challenges that we're facing is that most of the dealerships are unable to make a profit. There's been challenges all around. And these challenges are also faced in other sectors of the motor industry as well. So that's something that it needs to be acknowledged and noted. And how do we partner with MIFA when it comes to such challenges? I would say and mention the fact that it is important to consider having a flexible, or let's say flexible retirement fund options. Consider having flexible retirement fund options where employers can be able to navigate through these fluctuations. So I'd consider that also we train not only the employees but also the employers as far as financial planning is concerned. So that's something that we need to consider as from the part of MIFA when partnering with the employers. Also, I just want to mention the challenge that we're having. I think a lot of employers can support me with this one, is that Section 14 transfer. So I just want to take the thanks, much better. Okay, yeah, the second one, or the first one is economic fluctuations that our constituency has been facing. And the second one is Section 14. I'm sure Lisa can agree with me that it is very cumbersome. The process of Section 14 applications can be very tedious. It can be very complex. As far as the employer side is concerned. With regard to that, it can take months, but it has been mentioned also, it takes years to finalize the process of Section 14. What it does, Section 14 is actually migration of a provident fund to another, or a migration of retirement fund to another retirement fund. So it can take a very long period of time, and as such, most of the members are penalized, even when you have or are contributing to a different or a provident fund. But the other challenge is the fact that even when you are in a private pension or provident fund, and you want to migrate to the MIBCO or provident fund, it also takes months and can take years as well, particularly if a business is corporate. So that's a challenge that we're having as well. And I believe with the partnership of MIFA, we can be able to engage with employers to expedite the process of migration, to ensure that the process is seamless and it's also expeditious. So the challenge that we're having, the third one, is regarding the self-service portal. Self-service portal is working very well, I must say. The fund managers are receiving information, and also it's convenient for them. The fund members, they are also getting a service, required service from MIFA when using this particular portal. But we would like to plead with MIFA in partnering with them that they acknowledge the fact that the employers will also want to get access to information. So it's important that we extend the self-service portal to employers as well.
All right.
Thank you.
Thank you very much, Jeff. Reggie, as the Food Retailers Association.
Thank you, Program Director. I have to say I'm really fascinated these days by your interviews with Helen's in I always go to TV just for that. I concur with Jeffrey 100%. In fact, all points that is covered are really critical. The fuel sector, I mean, if you look like year on year, this year we're down by 9% on business. That is coming from already a low base during 2020-21 COVID periods. So there's a lot of hands exchanging, and I think we need to really come with innovative ways. Instead of coming with a stick
a more compliance kind of attitude, that's not going to assist. We need to be flexible. We need to understand the industry. We need to see with labor how we can save jobs, because that's the first priority. How do we save jobs? Because if we cannot save jobs because of this increasing cost and declining businesses, then we're going to be faced with already high, retrenchments. For me, we need to really be solution-driven, and agree with Jeffrey 100%. The other thing that I see as a challenge is the structure, and I think MIBCO is at the forefront to our members. Our members don't really know MIFA that well, and the more you say MIBCO, MIFA, MIRF, you're confusing them even more. So, but having said that, I think what MIFA has done, it needs to be commendable, because at the end of the day, they are the administrator. So they need to be visible, they need to be seen who they are in terms of addressing that. And also, both MIFA and MIFA needs to work together in aligning their processes. To a member, if there is a delay in a claim, it doesn't really matter who is to blame, whether it was MIBCO that caused that delay or whether it was MIFA. It's actually not important to the member. So both MIFA and MIBCO needs to work very, very hard in how they make this claim processing seamless and more efficient and more effective. The other thing that is a key challenge is the backlog on claims. Now, this you've got to see it in two ways. Firstly, there's been a major improvement, but we know that because we are internal stakeholders, but our members can't see it. And if one member goes to a meeting and they complain about the backlog of claims in MIFA because they have not experienced any efficient services, that is the perception that goes around, and that is the perception that's still being carried out in the network. And how do we actually try and mitigate on that challenge? I think the performance that MIFA has been showing today, and which they show to like the directors and us, that information needs to go to the members. Members need to see the actual data demonstrating that though we have a backlog, but if you look from year 3, from here, that's where we were and that's where we at. So there is an improvement. So I think we need to just do that. The last challenge I think we have is the issue around disability claims. It's a serious, serious issue because firstly, employers are not well educated on this issue of disability claims. And so employers tend to take the easier route, which is backed by the LRA, by the way, which is if somebody is deemed incapable of doing the job, just terminate. Instead of first assisting the employee with the claiming process so that the employee or the member of MIFA is not disadvantaged, because what we're really experiencing now is that by the time the member, apply for a disability claim, they are already outside the employment. They are not employed. And the worst thing is, if the doctors, after the diagnosis, etc., and those things, they come back and say, we believe that this member is still capable of working because there is an improvement in terms of prognosis. So they can actually, we cannot actually approve this claim. So now the member is left in the ditch because the employer has actually terminated the service. They actually have got nowhere to go. And I think we need to be responsible citizens, both employers and MIFA, MIBCO. We need to ensure that we continuously educate, members, and maybe we even challenge at MIBCO side when there is a termination to check if did you follow all the processes of educating the employee before you terminate them. So I think for me, those are just what I can add from what Jeffrey had said.
Thank you very much. Sonia?
Thank you so much. Good afternoon, everyone. On MISA's side, we are very concerned about the dire economic situation, and our workers are bearing the brunt. We've received numerous inquiries about the two-pot, mainly people who's asking about, can I withdraw the money to go for a knee operation? Can I withdraw the money to buy myself a car? People are really in desperate need of money, and they're going to withdraw their pension fund money to do just that. So education in this process will be key. We need to communicate more. Although we've already done quite a lot, especially in the past 18 months. We've had a webinar series, a very successful one, in collaboration with MIFA. We have given our members access to get their statements fast, but we still receive complaints about the turnaround time when they are asking questions and when MIFA is responding to queries. So I know there might be 1,000 success stories, but it's always the terrible story that gets to the union. But please, communication, we can only do more, and we can only improve. And then education. The members must know that the two-pot is not a quick fix. It's money that you spend towards that's supposed to be your emergency fund when you retire. So we need to educate them, and it's wonderful to hear that MIFA has now partners with financial service advisors to give at least professional advice to educate members before they make this decision. But communication and education. Thank you.
Thank you very much. Lerato?
Thank you. You know, it's always difficult to speak last because almost everything's been said. So I'll just be quick, but one of the biggest problems we normally come across, especially with this two-pot system, it's, yes, MIFA has tried to reach out and we're trying to work with them, but like I think it's Readiness who said, it's not always easy to access the workplace because Jeff and Reggie don't always want us to enter the premises as their representatives. It's not always easy. Because when you're talking about money and you're talking about a person's money, they do not want, and unfortunately, they do not want technology to tell them about the money. They want that face-to-face interaction, and it's always difficult to try and achieve that. But the other thorny issue is, it would be, which is, this is probably to you, is try and expand and have, you're gonna have your mobile kiosk or whatever, it's still not that human touch, you know, that face-to-face touch at your MIBCO offices. At least have personnel there, even if it's one, that one can always refer to instead of the technology. And also, how do you really reach those, your old people that are in any case going to leave the system and are not affected, but they're hearing this thing? How do you reach them so far-fetched and they're not in touch with technology? And then there is the biggest problem that we come across. It's the Tumtwening said it, the defaulting chronic employers who are not paying the fund, deducting the fund, that, you know, I don't even know how to quantify it, but it's a serious problem. And listening to the FSCA that this can be done, the SAPS is failing us, it's, yes, the economic is in dire stress, but how do we overcome that? Because equally as the employers are saying we are in dire stress, how do I then get my money if it's not reaching MIRF? Where will I get it from? But I was contributing monthly. My father has died, I can't get access. And with the POPI Act, it's become almost impossible for a third party to assist, because we're assisting as the trade unions. But it's almost impossible to assist because they need the person to be there, because the POPI Act does not allow MIFA or MIRF to give me any information about any of my members because of the POPI Act. So those are just, the thorny challenges that we come across. Thank you. Hello.
Thank you. Thank you very much. Thank you so much for your comments, your contribution on your challenges, but also what MIFA can do best in strengthening that collaboration. I would like to now bring in Lihle Khoza, who is the CEO at MIFA, to respond to what the stakeholders have had to say, but also give us the closing remarks. So thanks to you, Jeff, Reggie, Lerato, and Sonia. Thank you so much. Before Lihle speaks, you can still come, Lihle. We're going to put up a survey on the screen. Please, can you just help us to participate and just share with us what your experience has been today? It'll pop up here, and I'll get Regina to just explain to us how you can participate. It's quite quick and easy, but we'd appreciate you if you can just put in your details and give us some feedback.
Thank you. Thank you, Program Director. I do not think that there is much for me to say. I would like to express mine. I'm going to start by mine. Sincere gratitude to each and every one of you for having dedicated this time to come and listen to us. We sincerely do not take that for granted. We appreciate. I am hoping that as you leave this conference, I have heard someone saying, I came in, I left, I was left none the wiser. I truly hope that that is not the sentiment that you are going to share. But if there was an instance where you felt, I needed more of this information, I needed clarity on this one, we have shared the contact details as to where you can contact us so that we can further have a dialogue. This is our first employer conference. It's the first of the many that is going to come. You know that I had an understanding somewhere in my life that there are no mistakes in life. There is a reason why there is a process. There is a reason why a baby will first crawl and take the first step, stand up, first step and run. And in some stages, when you have skipped a stage, you are called back to actually experience a stage because there's a level of wisdom that you will miss. It has happened too often in my life that I have missed stages, and the humbling effect of going back is a very interesting one. But you regret nothing. I walked in this morning, was shaking like a leaf. Now I can say that. I was very nervous because it is the first. I did not expect that we will have this much of a turnout. So I am humbled and I appreciate that. But of course, like any other journey, if the universe says it, who am I to stand against it? There is lessons to be learned. Therefore, I extend my apologies. We had technical glitches in terms of the sound for the online audience. In 2025, I promise it will be better. Better yet, in other provinces, because we do have an intention to go to other provinces as well, it is going to be better. It's a lesson, but do I regret having that feedback? Do I regret what we have gone through today? Not at all, because I'm coming out of this conference. I have wisdom, I have mandates, I have heard what the stakeholders have said in terms of where we should look at and improve. I have listened to what employer challenges are, and I appreciate that. It's the only way that we can grow this organization and serve you and serve our members. So I would like to thank you once again for this afternoon. I also would like to thank my team, and I just want to say your Christmas bonus is toughies. You did hear what's coming up. So we definitely need to be wearing toughies. So it's toughies all the way for us. And the only thing that I will say is go forth, build your businesses, and leave the retirement fund management to us, MIRF, MIBCO, and MIFA. We shall not disappoint you. Thank you.
Thank you very much. Dumeti will just explain to us how we can fill in and participate in this short survey.
All right, thank you. Test. Okay. Thank you very much. Thank you, Clement. So we're running a quick, it's very quick, it's very short. It's a survey that just allows you to give us feedback. Please, if you can all take out our phones, go to menti.com. Please go to menti.com. You will see the Menti sign. Okay, so you will see that sign at the top, and it will ask you for the code. It's very easy, you don't have to register. You just go straight into it. The code is 62374537. It's on the board as well, you can see. It will ask you a few questions. It's easy. You just click. We're not going to ask you to type something. Maybe there might be just one question where you need to type out something. Yeah, but click. If you can please do that for us. It should take at most for everyone, for us, for all of us to complete 3 minutes. Also, if I can please get an indication of people that have managed to do it. If you can please just thank you so much. Thank you, we appreciate it. Thank you so much. We appreciate it. Thank you.
Okay, thanks, Ruti. So menti.com, please just quickly fill it in. It's very short. It will help with the feedback. Ladies and gentlemen, thank you so much for participating in the MIFA 2024 Employer Conference. We have learned so much today. There's a lot to take back, feedback that has come, but also opportunities for improvement. Remember, as you step out of the room, you will go to the Clover Green restaurant. This is where lunch will be served. It's just on the right side, just outside this venue. Thank you so much for being here. Have a good day.